today's class we are going to see trading account and profit and loss account with adjustments. Okay, what are adjustments? Actually, in the trial balance, many information would have been added already, but some of the information which are not included in the trial balance will come as adjustments. Okay, adjustments can be done for closing stock or any other matter. Closing stock or outstanding expenses, prepaid expenses, accrued income, unearned income, depreciation, bad debts, interest on capital, interest on drawings, etc. etc. All those items which are actually going to be added as adjustments will be actually having twofold effect of treatments. Okay, twofold effect of adjustments will be generally either they will appear on the trading account or profit and loss account and on the balance sheet. Okay, so some of the items will occur on the trading account as well as on the balance sheet, and some of the items will occur on the profit and loss account as well as on the balance sheet. So which items will come under trading account as well and profit and loss account, that depends upon the nature of the item. Okay, so we are going to see in detail all these items. For example, bad debts. If you take debts which are definitely bad debts, are those debts which are definitely irrecoverable or called or known as bad debts. Okay, so what is meant by debt or bad debt? Bad debt means debts which are definitely irrecoverable from the debtors. Debtors are those people to whom the sales are made on the basis of credit. Okay, so those debtors, from those debtors, if the amount is not recoverable, then those are known as bad debts. Bad debts account which are not included in the trial balance will have twofold effect of treatments when we prepare the final account. First one is bad debts account in the debtor. So when it is shown as special treatment, we have to go for entering the bad debts will be entering into profit and loss account because they are actually indirect expenses. So it will be shown on the debit side of profit and loss account, and it will come on the asset side of the balance sheet, and from the balance sheet the sundry debtors have to be deducted by the amount of bad debts. This is one example. Now we will go on to the working out of one problem with the adjustments. So many adjustments will work out. So first problem, one illustration we will take up. Miss Krati started business on 1st January 2017 with cash of rupees 25,000, furniture of rupees 5,000, goods of rupees 10,000 and machinery worth rupees 10,000. During the year, she further introduces the capital of rupees 10,000 by opening a bank account. From the following information extracted from her books, you are required to prepare trading and profit and loss account as well as balance sheet. First thing, we will prepare the trading and profit and loss account. There are some additional informations are also given. Those additional information will actually come as our adjustments part. Okay, balance sheet we will take it up in the next chapter. Okay, next aspect. So first of all, we have to understand what are the informations given. Then we will go on to prepare trading and profit and loss account. The additional informations are: Ms. Krati used goods for 1,250 for the private purpose, which is not recorded by her in the book. That is why we are going to treat this as adjustment information. Then charge depreciation on furniture at 10% and on machinery at 20% per annum. But both these depreciation amounts are not included into the trial balance. On 31st March 2018, debtors, creditors and stock in trade were valued as 35,000, 17,500 and rupees 12,500 respectively. Okay, so now what are the trial balance items given? You can see there are almost 9 plus 8, 17 items are given. Receipt from debtors, cash sales, cash purchases, wages, salaries, trade expenses, electricity bill of factory, drawings of the bonus, which is 1,200 per month, cash paid to creditors, discount allowed, discount received, bad debts written off, closing cash balance, credit sales, and credit purchases. All these items are given, and you are asked to prepare the trading and profit and loss account as the first part of the question. Okay, some additional information are given which are to be treated as the adjustment factors. Okay, so let us view first of all the question. What are the items or what are the inputs are given in the problem? First thing, the business is started 1 year. It is business is actually only 1 year old. Okay, what are the total assets of the business? The assets of the business includes cash, furniture, goods, and machinery. These are the assets. So put together, cash 25,000 plus furniture 5,000, that comes to 30,000, and goods 10,000, that comes to 40,000, and machinery 10,000, so 50,000. The business is started with 50,000 assets. Okay, then the next year, further the capital is introduced into the business as 10,000 in the bank account. So that is also an asset, 10,000 as cash and in the form of bank account. Okay, all the other items we will find out step by step how to go ahead in preparation of the profit and loss account and trading account. Okay, so from all these particular, the first step is identifying what are the direct expenses, what are the indirect expenses, what are the direct revenue, and what are the indirect revenue. Okay, so after identification of all these things, we can go ahead with preparation of the trading and profit and loss account. First of all, first item when you take receipt from debtors, that will come actually receipt from debtors means the total debtors will go into the balance sheet. Next item is cash sales. Cash sales is actually the revenue item, which is actually a direct revenue from sales. Next one, cash purchases, that is a direct expense. Next one, wages. Wages is a direct expense, so that will be included into the trading account. Next one is salaries. Salaries will be indirect expenses that will be taken into profit and loss account. Next one, trade expenses, that will also be taken into profit and loss account, which is an indirect expense. Electricity bill of factory, which is a direct expense, which is actually incurred for manufacturing. Next one, drawings. Drawings of the owner. So that will be reduced from the capital account, and drawings of the owner is actually given as 1,200 per month, which has to be converted for per year. Then next one, cash paid to creditors, that is also an expense. Okay, so indirect expense that will come into the profit and loss account. Next one, discount allowed. Discount allowed is for the sales, so that will come under the direct revenue. Then discount received is direct purchase, so that will be deducted from the direct purchase. Bad debts written off, that will come in the indirect expense. Closing cash balance, that is a cash account. Then that will go to the balance sheet. Credit sales, that is also a sales account, so that will go into the direct revenue. Credit purchases is a direct expense that will go into the trading account. Now we have seen that what are the items which will be included into direct expense, which are the items which will go into direct revenue as well as into indirect expense and indirect revenue. Now let us see what are the steps in preparing the trading and profit and loss account. First of all, divide the columns into two columns. The left hand side all the debit account and right hand side on the credit account. And the top portion of the account is actually showing you the trading account, and the bottom portion is the profit and loss account. The trading account, you can see we are going to start with the preparation of the title, trading and profit loss account of the company for the year ended March 2018. This is the title of the trading and profit and loss account. Then debit column and credit column. Open the debtor column and creditor column. Amount should be shown as rupees. Okay, the particulars are written here, and there are two columns taken. One column for cumulative for preparing the cumulative amount, and the last column under the amount column we will show the actual amount after deducting the and after deducting the required amount. Okay, first let us start with the two opening stock. Opening stock, the stock we have seen in the beginning, it is given as 10,000. That is the opening stock. When we take the purchases, to purchases, there are two type of purchases. One is cash purchase and credit purchase. Cash purchase is 12,500 and discount received is 1,500, which is also given in the problem as the in the table in the problem cash discount received. Okay, so that discount received is 1,500. Credit purchases is 40,000 less drawing of goods for the personal use by the proprietor, that is 1,250. So if you deduct this amount from all these purchases amount, then we will come to the amount, the final amount 49,750. Next one, to wages, that is 2,500 given in the problem. To electricity bill for the factory, that is 3,750. That amount move on to the direct revenue credit side. So first item, by sales. There are two types of sales. One is cash sales and second is 22,500. Next is credit sales 65,000 less the discount allowed 700. That comes to 86,800. And by closing stock, which is given below the table as the by close stock 12,500 at the end of the year. So that amount, the total amount of that column, credit column, comes to 99,300. In order to balance these two tables, we have seen the right side column is showing you higher amount when compared to left side column, expense column. Expense column is showing you only 66,000, whereas the revenue side is showing 99,300. So the difference is a positive amount. That means the firm has earned the profit, which is the difference between 99,300 and 66,000. That comes to 33,300. By practice, that will be entered here for balancing both the columns, because the total amount is 99,300. Therefore, the gross profit carried down is 33,300. This gross profit will be transferred to the profit and loss account, to the income side, right hand side. Okay, that will be the end of the trading account. Now coming to the profit and loss account, let us start with the transferring of the gross profit from the trading account to the right hand side of the profit and loss account. The amount will be 33,300 transferred from the trading and profit and trading account. Next one, let us start with the indirect expenses. Indirect expenses starts with two salaries, 8,750 is given here. And next slide you can see two trade expenses, 3,250 trade expenses. Next item comes to bad debts return of 650. Furniture depreciation. For depreciation, there are two items. Furniture will be depreciated at 10% and machinery will be depreciated at 20%. Furniture, the amount is depreciated at 10% on the value of the furniture, which is actually given as 5,000. So 10,000 on 5,000 will be 10% on 5,000 will be 500, and 20% on machinery, 25,000 machinery what 10,000 is given as 2,500. Sorry, 2,000. So the total amount comes to 2,500. Now, with that, all the indirect expenses we have incorporated, and the indirect revenue, no other indirect revenue is there. So the total amount on the right hand side is 33,300, and the total amount on the left hand side of the profit and loss account comes to only 15,150. So here also you can see the difference is on the revenue side. So the firm has made profit. So net profit is the difference between 33,300 and 15,150. That comes to 18,150. So to balance both the side total will come as 33,300, and to balance both the side, net profit will be written here, and the net profit, this net profit will be taken to the balance sheet and the capital side. Okay, so equity side, the net profit will be taken. With that, the preparation of trading and profit and loss account is complete. Here we have incorporated the adjustments also, because we have said we have taken the 1,250 amount which is actually withdrawn as goods for the private purpose, and the depreciation is included, and stocks, debtors, creditors will be taken into consideration in the balance sheet, and the stock in trade was finally 12,500 is closing stock, which is also taken into account